There you go. She's got a lovely accent, by the way, I have to say, as an Englishman. There you go.
Thank you, Gavin. Okay, most of you raised your hand that you had a business plan, correct? Or a trading plan, right? Raise your hands again. Okay. Do you review your charts and your trades every day at the end of each week? Do you have policies and procedures? 1, 2. Out of the entire room, we have 2 people with policies and procedures.
On the internet, we've got 1.
1. That's phenomenal. Would you go to a hospital that didn't have policies and procedures on how to treat a heart attack patient? Do you think your money is any less important than life or death? For some people, it is a matter of life and death. How many of you came in here from a business profession, a professional business? Okay, everybody in the room, close your eyes and picture yourself as a professional. What do you see? You're in a suit, aren't you? Most of you. If you're in a suit and tie, dress pants, raise your hands. In your head, are you in this? Now picture yourself as a trader. What, in your pajamas, jogging pants, sweatshirt? You're supposed to be successful. Is that the picture of success that we have? But this is what we do to ourselves. Because most of us came into this business actually on the advice of a friend, or we lost our jobs. So we chose trading because it was going to be easy. Now, just in case anybody in the room didn't know who Wyckoff was, I wanted to make sure you did. All right, he was a trend follower, we know that. He was a tape reader, we know that. He was an educator. Now, why did he get into education? Because back in the 1920s, there was very little information on the business of trading. That's the reason he started writing the magazine. Now, when he first started trading, he did not take his trade for the first 8 years. He was practicing. He was paper trading. Okay? His greatest difficulty was impatience. Anybody in here impatient with the market? Everybody. This was Wyckoff's biggest obstacle. He believed that practice made perfect. You keep hearing practice, 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 right? That's what it is practice. What was his risk to reward ratio? How many of you in here use a risk to reward ratio? About 4 people out of the room. How many people do we have in the room? Yeah, 1 person, me. Now, in 1934, Richard Wyckoff wrote, 90% of all traders lose money. How many of you have heard that within the last 5 years? So evidently the 1920s still apply, correct? He also believed traders lost money because they were amateurs. They did not approach trading the same way that they approached a business. I'll show you that you don't either. Now, he said that in order to be successful in trading, you have to learn to use your own judgment. This is what's hard in trading. Now, judgment is actually the ability to judge, make a decision, or form an opinion objectively, authoritatively, and wisely. You have to use good sense, discretion, and exercise the ability or capacity to use judgment. Now, who would have more judgment, better judgment, okay? A 16-year-old or a 40-year-old driving a car. Who would have more judgment or better judgment, I should say? The 16-year-old?
My friend,
You do not want to be on the road with my 16-year-old, okay?
I'm not very good at it. I'm great in England, but not here, I have to say.
Well, most people would say it's the 40-year-old, correct? Why?
Experience?
Experience.
Yeah.
Practice. Practice makes perfect, right? What do new traders that come into trading do? They spend their time looking at platforms, buying indicators, looking for a broker, looking at the markets, or I should say getting an opinion of which market to trade, and their ultimate goal is to make lots of money. That's it. That's all they want to look at. What they do not do is look at risk to reward. They don't have any patience for the market to come to them. They have no skill. They're guided by the hope of profits and the fear of losses. They have no trading plans, and they are more than willing to take a small profit and give up huge amounts of money.
Yeah, can I ask you a question?
Sure.
You've mentioned something there which is of interest. You said, guided by the hope of profits.
Yep.
But do they know when they come to the market about fear? Do you think they know that in advance? Or do they come at it with, oh, all these people are making money in the markets, it's easy, so there's no fear at that point?
There's no fear at that point.
And that fear of losses doesn't come until they've experienced it, when they start to see. I was working with one guy, who shall remain nameless because he's in the room here, who I told you about, he was hitting the bid, trying to hit the bid, not understanding that as the market takes you an entry, you're always going to be 25 down or $12, you're always going to be a tick down. He lost $40,000 trying to catch a move. Mm-hmm. And then the fear set in, and then the depression set in, and then the absolute desperation set in, until his marriage was on the line. Just, this is what happened. But so could you repeat that to the audience out there, that maybe the hope of profits is there, but the fear isn't there at the beginning? And that's
no, it's not. Not until they have at least one major loss, and then that's when the fear comes in. So at first you do not feel the fear, but you do before long. Okay, now let's think for just a moment. Take trading and let's set it aside for a moment. Let's say that we were going to open up a new restaurant. What would we immediately do in our brains? I mean, everybody eats, right? So we know if we wanted to open up a restaurant, what would we do? First, we would look at the amount of capital that's required. I mean, if we want a franchise, we're going to have to invest heavily in the franchise fee, correct? All right, what if we didn't know how to flip burgers? We'd have to learn, right? I mean, that takes a lot of skill there. We have to identify the equipment. Now, just because we have a grill, does that mean we're going to be a successful restaurant owner? I mean, it cooks the hamburger, right? How could we not be successful because we have a grill? Because we still have to cook the hamburger right. Okay? What about location? Does location matter if you open up a restaurant? Would you want to put it out in the boondocks, which is where I'm from? Or would you want it more towards the city where customers are? What about the hours? How many of you would go to a restaurant that changed their hours on a daily basis? Do you do it in your trading? Well, today I'm going to trade at 9 o'clock. And tomorrow I'm going to trade at 3 o'clock in the morning. And you expect consistent results? Does anybody do this besides me? What about your customer base? Do you know your customer base? In the May issue of Stocks and Commodities, how many of you think the ES moves more than the euro during the day? Anybody? What market moves the most? On any given day, which market, on average, is going to move the most?
On what basis? On a percentage basis?
Point basis. We're making money off of points, right? Ticks. Come on, tell me. Huh? The euro. The euro moves more than any other market. Looked at the Dow, I've looked at the ES, I've looked at the NASDAQ. Look in Stocks and Commodities, you'll see all the research you want.
You wrote an article on this, didn't you?
Yes, I did.
You said, is that published yet? Because
yes, May 2010.
You should read it. It's fascinating when you go through some of the statistics And just repeat this for the audience. Just let them know that I'm talking about your article, because they can't hear me. But
I'm sorry, they can't.
Yeah.
Okay, in the May 2010 issue of Stocks and Commodities, I did an article that compared all of the currency futures with the ES. Now, the euro is the number 1, the yen is number 2, and the Australian dollar is number 3. The article even goes into detail what time of the day is the most movement. Now, we're going to do a follow-up article that actually tells you the best time of the day to catch the trend moves as well. But my point is, this is your customer base. If you are a trader, this is your business. You have to research it. Okay? You also have to define your policies and your procedures. Now, all weekend we have talked about we're dealing with the unknown. We don't know what price is going to do once we enter a trade, do we? But I do know what I will do. I do know where my stop is. I do know where my profit target is. I do know what has to happen with price before I ever enter that trade. That gives me confidence. How many of you in this room or in the webinar right now has the confidence to say, I'm going to be a successful trader? I do. Every moment that I am at my trading desk, I know exactly what I'm going to do because I have policies and procedures. An experienced business owner, they track their sales, they track their expenses, they track their losses, they track whether they're on budget or not. How many people in this room came into trading with a budget? Wow. What other business would you go into without a budget? You even have a household budget, don't you? Anybody that doesn't have a household budget? Oh, good, I want to marry you, honey. Harry, I'm divorcing you, hon. This guy has unlimited funds over here. He has no budget plans. We change our policies. We change our procedures when needed. We even identify new products, don't we? Look at McDonald's. Does anybody remember 40 years ago, McDonald's offered a hamburger and a cheeseburger and a fry? What do they offer today? Because the market changed. They offer salads. They offer a McRib. They offer apple fries. When did we ever think they would have apple fries? Not when I was growing up anyway. And how do they introduce these new products? Do they just go out and buy a boatload of apples and say, okay, we're going to offer these? Or do they test the market first? You can test the market that you're trying to trade as well, can't you? We have simulators. We have paper trading. We have all the devices that you can test it, but do you know you just jump in all or nothing? Let's look at Walmart. I love Walmart. Not personally, but I like to use them as an example. First, if they're going to bring a new product in, they're going to test it first. If it passes the test, then it's a success and they bring it in all the stores. If it fails, that's it. They don't use it anymore. Let's say they purchased a case of products for $10. It's got 10 items in the box. Their investment is $10. That's their risk, isn't it? They mark it up $2. Why would they mark it up $2? Because that's double what their risk is, isn't it? So their profit potential is $20, and they have limited their risk to $10. We see these concepts in every business, but we don't apply them in our own trading. Now, I used to work at Duke Medical Center, okay? Duke Medical Center, they have policies and procedures for everything that walks through the door. Heart attack, foot infection, whatever you name it, they have a policy and a procedure for it. They have emergency drills, fire, kidnapping, hurricanes, okay? Why do they do that? So everybody knows what they're supposed to do when they're supposed to do it. They're dealing with the unknown, but their employees know what they're supposed to do at any given moment. Okay? But life overrides policies and procedures. Let's say that someone came in the hospital and they did not have a policy or procedure in place for it. Do they wait and write one down real quick? No, they override it. Now, the other week, me and Gavin had a trading contest because for some odd reason I thought I'd go up against Gavin. I'm not sure why I did that.
It was fun.
It was a blast. But Gavin gave a perfect example of overriding your policies and procedures. Was anybody present that day that we had the live trading contest? He was trading the NASDAQ.
Yeah.
He saw an up thrust. Now, his stop was down here, but he saw an up thrust. Life overrode his policies and procedures. Does everybody understand that? Now, be realistic on your expectations. You're going to have good days, bad days. Some days everything I touch just turns to crap. Other days, it's a no-brainer. I don't care what I did, I would win. James Keene was a fund manager for J.P. Morgan and William Rockefeller. He lost everything a couple of times and came right back. He said he was doing well, if I am right, 6 times out of 10. Now, why did I bring this up? If you are trading intraday, how many of you trade intraday? What's your profit target intraday? Give me point-wise. Come on. 1 point. On what market? On the ES? 4 ticks. You could probably get 8 ticks. Normally. Okay. What other? Anybody else? Okay.
Who defines, prior to getting into a position, exactly what they're going to take and why?
Who defines where they're going to, what they are going to take before they ever get in? Me.
Well, out of interest, sometimes you put a target in it, maybe you move it depending on what's happening sometimes. Mm-hmm. Yeah, I mean, it's just interesting. I just from a personal point, Rob and I trade a lot. Oh, sorry, and let me just take the headset, just very quickly. The questions come in as well about the trading contrast and what happened. If I recall, I was in a position, I was long, I made money on the trade, but what happened was I had to take my position off because what happened was my policies and procedures actually in that instance did work. And what happened was several people said, Gavin, you came out the trade because you saw something that changed. That's Scal's point. We were trading, we managed to get a live trade. The trade was, if I recall, it was a test. Yeah. And it actually went up. But suddenly, and it was only on a 3-minute chart because we were right at the end of the session, there was a sudden surge in volume and it bounced up and came close straight on the low, and I looked and I was actually coming to some resistance on the bigger time frame. What did I choose to do? Stay in the trade and impress everybody and make 6 more ticks? What did I say? I executed the position for $40, whatever it was, very small profit, and said, I'm out. Here's the reason why. What happened to the trade? It went. I should have actually shorted it, but I was too busy talking. But it came down. But that's where when you have a target. Rob and I use what's called an emergency stop. How many of you use emergency stops? But you're actually using a mental stop first, but you have the emergency stop further down. See, I use a 20-tick stop on the currencies. I don't know if that's too far for some of you, but I'm using a 20, sometimes 25-tick. But that's not the actual stop I've got. I've got a mental stop that if I'm short... Actually, who saw the live trading room when I did it with Rob on Friday, where I was on, several of you are shouting it in, but I actually took a trade on the British pound and made a losing trade for 112.50. And what happened was I'd made 250. We haven't made that many losing trades, but this was one where my direction of the market was correct. I had an upthrust in the right place in a downtrend. I took my position. I was in the market. It went up on no demand. Now, professionals have to sell into an up move. So what happened to the price while I was short? It went up. and I actually cut the position 7 ticks up to my 20 because it was going too far. 10 ticks was going to be my limit anyway. I got out at 7. What happened? The market went up on heavy volume, but it was pushing up. The next bar closed down, boom, next leg down, except I wasn't there to trade that. Rob, how often do we see that? Where the market suddenly, because you managed to time your entry superbly, you rarely get stopped out or losing trades. With me, that was one of the, well, you've had one this year, I think. But what happened? What happens? How do you deal with that situation where the market's collapsing like that, and then suddenly you get that spike? Do you want to just quickly, Rob, just come and have a quick word? Just because a couple of people have asked, and I don't want to interrupt, but I think it's good just to bring in the trading.
I didn't want to interrupt Gail's
No.
presentation, but
You're okay with that? Because they're all typing in. So.
okay. Actually, a couple things. Point of clarification. Yes, since January 4th of this year, that's correct. I've had the one losing trade in the live trading room, and that was the middle of January. But that being said, to Gavin's point, actually what Gavin did was he took the trade right before it popped up. I actually do the opposite, which is if we're in the downtrend, I wait for the pop-up, and then I short the pop-up. So I'm a trend trader. I'm a hardcore trend trader. And what I usually look for is brief retracements in the, counter, if you will, to the predominant trend, brief pop-up, and then I go ahead and I actually short. So if it's been going down, 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 just straight down, I won't actually short that. I don't short the low, hoping that it goes lower. I want to go ahead and get a more favorable price, typically a pullback to at least a short-term support, or in this case, resistance level, and then execute my entries. That's the way I do business. Do I go ahead and miss some trades occasionally? You bet I do, because the low of the day can go lower, but you know what? Then that almost becomes effectively what? A breakout trade, right? And we talked about breakout trades yesterday, as I recall. We talk about them in my room all the time. A lot of people have very low probabilities with their breakout trades. So I don't go ahead and short the low, hoping it's going to go lower, buy the high, hope it's going to go higher. I wait for a retracement within that predominant trend. That's where I take my entry. Yeah, so in this particular case, Gavin...
Afterwards, after Gail's presentation, I said, before you go, could you show what you're sort of talking about with that?
Oh, yeah.
Show the trade.
Okay, sure. Yeah, absolutely. So turn this back over to you guys. But just so you guys understand my philosophy, I'm a trend trader, but I always wait for or almost always wait for a retracement against that predominant trend to get more favorable pricing, okay, rather than buying the high of the day or shorting the low of the day. I feel far more comfortable in my trading, and obviously, I feel that that's worked out very well for me because if you think about it, just even since a week ago Thursday with the incredible market activity, what was happening? We were looking at ranges in the euro. A 5-minute, 15-minute bar may on average move, 10 ticks in the euro, 15, maybe 20 ticks over the course of a 5 to 15-minute bar. What happened after Thursday? Those ranges started spiking to what? 30, 40, 50 ticks for 5-minute, 15-minute bars after Thursday. Not Thursday, but like Friday and the following Monday. Okay. Now, if you go and short the low of the day on a 5-minute or 15-minute bar like that, as I've surveyed people, about stops in the euro, it seems like in the S&Ps, most people I've run across have stops of 6 ticks to 12 ticks in the S&Ps, and 8 ticks to 20 ticks. For intraday trading, this is in the euro. Okay, so many of you, I've seen some heads nodding, so maybe some of you fall in that category as well. Now you think about those ranges then, on that for that Friday and that Monday following. Any 5-minute bar that just even had a 50% retracement in the middle of that bar could have very easily gone ahead and stopped you out of a trade with a 8 tick to 20 tick stop.
That British pound one with a 20 tick move up.
Yeah, against you. Yeah.
Hand it back to Gav, because what they're going to do, people want to see a chart, what you're talking about.
Sure. Let's go and get back to you. Anyways, those are some of my thoughts, gang.
Just so you know, Rob will come back after Gal's finished, and we'll actually show an example of that spike. Sorry, Gal, I've been a bit longer than I thought, but good points.
Oh, no problem with me. I'm like Rob. I like the trend, and I enter on the what I call a low-risk entry point, which is a pullback. Okay. This is what I consider realistic expectations. If you're trading intraday, like on a scalping time frame, I take 10% of the average daily range for the previous 254 days. My stop is that number divided by 2. So, for example, if I'm trying to make 16 ticks on the euro as my first profit target, my stop will be 8 ticks. It's really that simple to me. In this, again, it goes back to Wyckoff's theory on risk to reward ratio. Now, this is just a simple risk to reward ratio table, and it takes 10 trades. The column A is using a 1-point stop, okay? The trader B column is using a 2-point stop. The difference is in the reward. Trader A is going for 2 points. His stop is 1 point, okay? Trader B is letting 2 points go against him, and he's only taking 1 point out of the market. Trader A has more negative trades than Trader B, but who made more money? Trader A. Why? Because of his risk to reward ratio. Does everybody see that?
The stops and the points again on A and B.
Okay, Trader A is using a 1-point stop. Trader B is using a 2-point stop. Trader A has a 2-point profit target, 2 times his stop. Trader B uses a 1-point profit target, a 2-point stop. Now, when people look at me and they say, well, I have a lot of successful trades, but I'm not making any money, I tell them to look at risk to reward ratio. Y'all have all been given a tremendous amount of education in the last 2 days. But it's up to you to go home and turn that information into a trading plan. When I met Gavin, and he was going over the volume spread analysis with me, the one thing that just popped out at me was the no demand and no supply. I mean, that is a low-risk entry point. If you've never seen it before in your life, just go and look at that. Okay? It's a little bar. It's easy to recognize. And you're going to get at least double the reward. But you have to be able to see it. You have to be able to say, this is my plan. This is my time frame. And then you need to track it. I mentored a customer that had notebooks full of charts and previous trades. He had notebooks full. What do you do with them after you've done it? Do you review them? Do you say, hey, this really worked out good? I think Gary was talking about practice, how efficient your practice is. You know, it's really great if you're using a trading journal. But if you're not going back, looking at the trade on the chart, I make all of my students, when they take a trade, they have to snag their chart. And then they have to put their stops and their profit targets on them. And then they have to fill out the trading journal. Well, let's face it, if you came from a professional background, this is what your secretary did. This is not what you did. You work for yourself, you have to do it, unless you want to hire a secretary to do it for you. This is a business. Treat it like one. Now, what good is having 3 notebooks of trades if you don't review the trades? If you don't say, well, it didn't work. Where's your statistics? You know, when I trade with Infinity, how many of you display your dollar amount in your profit and loss? Most of you give the option, you can display it in dollars or ticks. Mine's in ticks, in points. And the reason is it's a mental frustration for me to see dollars. It's great if I was winning, but if I lost, it's really bad. But it makes me feel better to know it was only 8 ticks. Wyckoff did the same thing. Measure in points. Don't measure in dollars. Why do you think businesses take inventory? Do they live by their balance sheet? They live by their inventory sheet. That's the same thing. Your inventory sheet, that's your points, whether it was positive or whether it was negative. It's simple things like this that make a difference. When I do a seminar, I do a 3-day seminar. 1 day is just me lecturing, and 2 days is people trading. We've trained over 50 people. 90% of them were successful by day 3. Now, out of all of these people, we had people that were using Fibonacci's, pivot lines, volume. We had people that were trading long-term, that were trading short-term, they were trading ADX, they were trading trend. I mean, you name it, they were trading it. How can you get 50 people in a room and 90% of them be successful? You give them a business plan. That's how big of a difference it makes. How many of you ever been in a trade and gone, oh my God, what do I do now? I have. One time. That was the last time too. I do not know what the market's going to do. I do know what I am going to do. And that's your choice as a trader. Do you know when you're going to enter? Do you have it written down? Do you know why you have to write it down? Y'all are so exciting here. Do you know why you have to write it down?
It's been a long 2 days, Gail. Give me a break. Yes.
There is a reason here. It makes you think the process through. Do you know why you have to do a trader's log in a chart? Because it makes you think the process through. That's what makes the difference. Everybody thinks it's just the indicators themselves. It's the application that makes the difference. Remember when I was talking about the McDonald's and I was talking about the grill? The indicators are the tools that get the job done, right? But the tools are only as good as the person that is using the tools. Just like the grill can't cook the hamburger, it takes somebody standing there flipping it. The same thing applies to trading. Now, the one thing, there's 2 books by Wyckoff that I actually recommend. I call them my Bibles, not because of the volume in them. It's the business sense of it. You know, Wyckoff never thought you should use 2 or 3 points, never more than 2 or 3 points as a stop. He said, if you can't make money with a little bit of money, you ain't going to make it with a lot. If you go back and read either one of these books from a business administration point of view, you'll really get insight into Wyckoff in the business side of it. It wasn't just the volume. It wasn't just the trend. It was the way he thought about the business. I mean, anytime he could avoid a loss, he was going to avoid it. How many of you use trailing stops? That was a last resort. Wyckoff always believed it should be up here because it should be based on support and resistance. Any questions? Come on. We have any questions, Kevin?
No, not from the web. No, all clear and green. We're good so far.
Your point about, I guess, support and resistance versus trailing stop. I've constantly heard let your profits run and cut your losses. And so one way of kind of making sure maybe it will break out of the resistance, but if you get out of the in other words, a trailing stop will protect you from the downside, but still keeping the trade in case there is a breakout.
I think that really depends on your trailing stop per se. Because let's say that price moved up, let's say it moved up 10 ticks. Where's your trailing stop?
I have to look at the chart in terms of what did the move do? Did it do an increased volume, increased range? And there's a whole lot of other factors.
Yeah, but normally a trailing
Gail,
stop.
you need to repeat the questions that they're
Oh,
asking
I'm
you,
sorry.
just so they know what you're answering. Otherwise, they can't hear it.
I don't remember that part.
I
Yeah.
know. I found it difficult too. So.
Okay. Repeat your question because now I forgot it.
The question basically is support resistance versus using a trailing stop as your exit point.
Okay. The question is using support and resistance versus a trailing stop. Trailing stops typically are actually programmed as a percentage of the movement up. There's all different ways to do a trailing stop. Wyckoff believed in using support and resistance because it was based on price. Let's say that price moved up 10 ticks, and then it moved back down 3 ticks. Okay? A trailing stop might take you out. But Wyckoff would have said, no, I'm going to put it right below that 3-tick movement down because it was led by price. And I've never seen a trailing stop that was actually based on price itself as far as support and resistance goes. And I've written documentation on about 1,500 indicators. So if there's one out there, I don't know about it. There is one called the chandelier stop, but again, it's going back too far.
Now, just so you know, in trade guide, we saw the H stop. I don't think you ever saw that in the software.
Mm-hmm.
Okay, because they don't show it very often. But what it does do, it's similar to a chandelier stop. It's not identical. It's based on volatility of the bar, and it's based on volume, and it adjusts the H stop. And I will show that for those of you who don't know what it is. But it's
But it's not based on highs and lows, is it?
not based on highs and lows. No.
See, that was my point. Most trailing stops are not going to be based on highs and lows. And this is one of the things that Wyckoff used to stay in the trade was the highs and the lows, which is something I'm an avid fan of, is actually using the highs and the lows. But I've been studying his stop mechanisms for about 6 months now. And he has some really, really unique stop mechanisms. For example, if you're an intraday trader, and let's say that price moved up 10 ticks, again, we'll use the same example. Okay, if it goes back to 5, you better take your profit. That was that was just the way Wyckoff saw it. If you can take a profit, you have to take a profit because you're a business owner. Right. He's got something that's called the halfway mark or halfway point. He would let it go at least halfway, but after that he was going to come out. But I think that also goes into what type of trader you are. The faster the trader, the quicker you're going to have to be. The more longer term, I think the more you can go with it.
Question from George Gausk, who's a long-standing customer. He said, when reviewing your I might need to repeat it. You can repeat this.
Okay.
It's there. There you go. Okay. Question came in for George. Okay, it says, when reviewing your trades, what would you look for in your journal, and would it be good to have what section? Okay.
Mm-hmm. Okay, the way that I do my trading journal is I do it by month, okay? I have to write down the entry, the time, all of that good information. And then I have to write down why I took the trade. What did I see? And I have to attach a copy of the chart with it. So I know at that moment in time, what was I thinking? Okay? That's extremely important for me. The one thing that came out of this trading journal is I am so trigger happy, it ain't even funny. I will convince myself to jump in a trade just because my finger just loves clicking the button. That's it. I could track that through my trading journal, actually. I could also track, this was a big one for me, I used the RSX by Mark Jurek in my trading. And I noticed that from my trading journal, every time the RSX went above 50, it was a negative trade. See, all of this information is incorporated into my trading journal. What were my indicators doing? What was I thinking? What did price do? Was I stopped out? Then, at the end of the month, when I want to go back and review my trades, I can tell you the trades that worked out. How do you think I figured out the supply, no demand? I didn't take Gavin's word for it. I traded it. I said, oh my God, this is such a low-risk entry.
I mean, Tom Williams said to me, if you just traded no demand and no supplies in the right place, it's got to be in the right place. If you repeat that back, they're the best entries.
Yeah, they are absolutely the best entries from a low-risk standpoint. Okay? No demand, no supply. You just have to learn, where are they? That's it. Take home everything that you learned, write a plan to use no supply, no demand. That's it. You can make money off of those two setups. And I've proven it. Multiple times in the room, I have proven this. It is not difficult. These are easy trades while you're building your knowledge base on volume. And they give you excellent potential for reward. I mean, think about it. They're little bars. I put my stop right up above that little bar, and if it goes down, I am one happy camper.
Just so you know now, just a quick one. You might want to repeat this. When you see no demand, best place to put an order, is where I put, I'm not saying you need to do this, is below the no demand bar. So as the market falls, it confirms the no demand, and then you'll make money on that. I don't go in. Do you want to?
I'm going to let you sit.
Okay, all right. Let me just very quickly there. 2 rules, very important rules. You might want to write these down because these rules will make money. Number 1, in order to short a market, you must have weakness in the background. That means a high volume up bar, preferably with a downtrend forming, which I'll show you later. That's a rule. You can't have a no demand bar in an uptrend. It doesn't exist. You'll see it. It'll look the same shape. It'll be a narrow spread. Volume will be less than the previous 2 bars. It'll even put a red signal on it in the software because it doesn't differentiate necessarily on the trend. But you must not ever short no demand in an uptrend. Ever. 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 I don't know how clear I can. That's what people do. They get the software. They go, Gavin said no demand. There's one. And the market's trending up and they go, I'm short. And then it just keeps going. Because no demand only exists in a downtrend. It's like if you see a polar bear and you're on the beach in Hawaii, there's 2 things that can have been happening there. Number 1, you're on cocaine or acid or something. Or 2, something has escaped from the zoo. But usually you don't expect to see a polar bear in Hawaii. But if you see a polar bear in the Arctic as you're walking through there, i.e. you see a no demand bar in a downtrend, it's in the right place, that's your entry. The opposite is true when you're going to buy the market. You need to see climactic action on the down bar. Yao Ming has appeared. You've seen the first preliminary test. The market has lifted above the top of Yao Ming's bar. As it goes up, it'll dip back down to the top of that bar. It'll be a low volume, narrow range down bar. That is a no supply test. After you've got strength in the background, that's where you'll make money.
What about an upthrust in a down market?
That's a great one as well. In fact, Wyckoff would definitely, if he was standing next to me today, would say no demand is one principle. But if you get an ultra high volume upthrust, which is the trade, Rob, that stopped me out. Now, by the way, just so you know the rule, 20 ticks was my target. The trade got to 7 ticks. I'd already taken 250 out of the market. I got stopped out for 112.50. I didn't want to go past 150 in my mind. I was okay. I closed the room out in profit. I have not closed my room out yet in a negative situation. And I don't think Rob has. Not that I know. That one day. Well, my room, in fact, I have not closed out in a negative day in the whole since January, since the beginning of the year.
I trade 5 days a week.
And he trades 5 days a week, to be fair to Rob. I only trade 3. So, you know, you've got to equate it. He probably takes double the trades that I take, probably more than that. So let me be fair to Rob on that one. But if you see an upthrust, it has to be in the right place. Now think about it. If your market's trending up and it pushes up to close on the low, it may well indicate a little dip in price. And it often does. But you're shorting against that trend. So the best place to short the up thrust is in a down move when you see that. And that's one of the things that Rob does. He looks for that spike in volume. So there. What we're going to do, just to finish off when Gail's finished here, is we're going to show you the scan. I've just done a scan of the Dow Jones, and I've found something quite unusual. So we're going to look at the scan that I've just done. I'm going to show you the indicator scanner. And then we're going to just take a couple of your stocks, and we're going to aim to wrap up about 5:30, so about 40 minutes, so not long to go. We're at the home stretch. And if you hang around, if you can, I know some of you got flights. Richard and I, well, Richard especially, would like to buy you all a drink at the bar. He's got an open wallet. He said, drink what you want, how much you want. But there is a caveat. He said, Richard did say, he's our marketing director as well. He said, we'd love, if you think we've done a good job, if you could give us some sort of testimonial, either on camera or in writing, for those of you on the web. We're trying to get the word out there. We can't get the word out there without you. I know some people aren't comfortable doing it. Earl, I know we've talked about, and I appreciate your support. You've been great. The way people believe that we're helping others is when they see your expressions. And I know you're all tired, and I know you've all had enough, and you're like, I just want to go home. But I can only put these events on and support the general public if you support me back. And the same for Richard. We'll keep putting these on. We don't make a great deal of profit. You can imagine we provide food, we provide folders, and we're only charging 300 and something bucks. So this isn't going to be a great profit maker, but I don't do this for that reason. I'm on a mission, and the mission is to help all of you and everyone out there. And I know that this starts just like Anthony Robbins did, with a small group. But because of the goodwill that's generated, it grows to the bigger group. And I expect in 2 or 3 years' time to be talking to thousands when my book's published in a few months' time. Don't say anything. Richard's going, that book, yes. The one that's been going for the last 8 months. Anyone ever written a book? Anyone ever written a book?
He's done the first 2 words.
Yeah. Richard said, I've written the first 2 words of it. It's called The End, and I'm working backwards. Anyone here written a book? Has anyone in the room written a book? Do you know how difficult it is, even with all that knowledge, to sit there, and I like to trade, and to put, and I know Gail's writing a book, you really want to get the knowledge out. And as I've written the book, I mean, some of you could, I mean, I know I'm not going to show it, but what I've done is annotated a chart and shown the setup. And I know these guys are laughing at me and you're never going to write that book, but I will write that book. I have a commitment. I have a commitment here. If that book is not published, I'm going to commit it. I'm going to commit it in public. If it's not finished and published by September the 1st of this year, what's the punishment? I can't think of anything bad enough. Everybody here, I'm trying to think of a suitable enough punishment.
I'm going to send Robert Ferguson to your house.
I'll think of it for the end, but I don't know quite. Richard will think of some sort of punishment for me. Anyway, let me finish off with Gail here, and then we can go and look at those scans.
Okay, do we have any other questions on the business portion of it? I mean, if you really sit down and look at what you're doing in trading, you're not applying business tactics. You're doing it as a hobby. You're doing it as a sport. You might even be doing it just to prove your ego, to prove you're right. But you're not doing it for business. Okay? Do we have any other questions?
No, I think George was just agreeing with your comment about keeping a journal. He was just saying how vital that is, so that's good.
That's extremely vital. I've mentored probably over 30 traders this year. Every one of them have improved their trading just by keeping a journal.
It makes such a difference.
It's a huge difference. You just don't know. Now, one other thing I want to say before I go is, as Gavin said, I was working for his competitor. And one of the reasons that I pointed out some of the stuff about Wyckoff, especially about him being an educator, is because there was not a lot of information for traders when Wyckoff was around. One of the things that really impressed me with Gavin, there's a lot of information out there for you to buy. How many people out there right now try to teach you how to read a chart? Gavin is really the only person I know. Well, Gavin and Tom. I'm sorry. But I'm going to tell you something. With the invent of the computer, I think we got a little bit lazy. We thought the computer was going to do everything. I was really, really happy to see someone actually sit back and say, hey, y'all, don't get excited. It ain't that easy. You still have to work for your money. Trade Guider's the only one I know of. You know, they say they don't have the secrets. They tell you you have to work. That's the reason I actually like working with Gavin. He doesn't mislead you. Okay? That's all. Now it's up to you.
I appreciate that. That's very kind of you. Thank you. Round of applause for Gail, everybody.